Thanks for joining the R.O.Hammer Company's podcast. I recently had the opportunity to sit down with Scott Hamilton, founder of ARM-Tech Advisors. You may be aware that the ARM industry is going through a major transformation. Scott is a transformation expert and a trusted advisor to a growing number of agencies looking to optimize their collection vendor tech stack, their compliance tools, their payment processing, and more. Scott's also on an impressive mission: save the ARM industry $100 million in 2025. If you haven't yet interacted with Scott, I think you'll really enjoy this episode. Thanks for joining. Thanks for joining, Scott. For those of you out there who don't know Scott, you want to tell us a little bit about yourself and how you got involved in the ARM space?
Sure, that's a big opening question. So Scott Hamilton, right now I'm CEO of ARM-Tech Advisors. That's where I am now, but how I got here is much more about 25 years in with the large banks. So GE Capital, Chase, Bank of America, and then some consulting after there, between there and here. So have a few years in the lender space, a good chunk of which in the collection department. Also little credit policy, little servicing, call centers. So a long history in the consumer lending space is the short story.
That's great. Some large companies there. Prior to ARM-Tech, are you able to expand on what you were doing consulting-wise?
Yeah, it was a couple of different companies, but largely in the collections space, anywhere from tightening up areas of risk at some regional banks to getting to transformation strategy at some smaller lenders and agencies. And that's the theme that goes through my whole resume, is leading transformation strategy. So that's what I have done for 20 plus years. That's what I love to do. And that's essentially what we're still doing today.
Are you able just to tell us kind of through that path how you ended up with the idea and ultimately became co-founder of ARM-Tech?
Yeah, it's really a whole lot of that. I've worked in particular departments before, be it servicing or risk or collections or recovery or analytics. And every time I work in those roles, I always often find that you can optimize within your area, but the much more interesting to me space is when you can look across the organization and figure out a smarter mousetrap for everybody. It's harder to do. Most people run away from that sort of thing. I love that sort of stuff. So in recent years, as I've been chatting with lenders outside of the top 5 lenders, and then all the way down to some smaller agencies, the same is true. Everybody has an interest to understand where's the industry going? How does it all fit together? How do all the capabilities fit together? And what are our peers doing? What can we learn from our peers? And that's traveled with me back in GE Capital, back in the 90s, that was true. And then ever since has been a real challenge for people. At one phase, a lot of the lenders were going to R.O.Hammer Roundtable, which is a fantastic organization, but it's quite infrequent. Very few people literally go to those events, and there just has always been this void of understanding what the target state is, or understanding what I'm doing that other people are doing better. And that's really the theme that I've operated in, and really quite a large challenge in the industry today, and that's where ARM-Tech is focusing now.
You're drawn to the transformational nature of it, and the industry just happens to be going through a major transformation, which is kind of how we found each other. You do have some co-founders at ARM-Tech. Are you able to share?
Yeah. So Jim Beck, he has a day job with MRS. He and I came up with the general idea to really help the industry transform intelligently and safely. So that's our mission. We have a team of other partners as well, which I'll build on in a second, but our mission is simple: to help the industry transform and lower their cost to collect as safely and as quickly as possible. There's a bit of urgency going on, and then the learning curve on how to solve that problem is pretty steep. We've also formed a bit of a coalition of like-minded industry specialists So there's, for example, there's a telephony specialist or a modeling specialist or someone in the cybersecurity space where our expertise falls off. We lean on them for their advice. So our goal is to essentially be able to understand where the industry is and where it's going collectively, but also within each of those particular sort of subtopics. And where we have expertise, great. Where we don't, we partner with people that are hopefully just as unbiased and as capable and interested in transforming the industry as we are.
I think you're filling a large gap. I also like that you mentioned the sense of urgency piece as well. I recently met with Heath Morgan, and he talked about that kind of in a slightly different context. Heath is an AI expert, and I know that you know a bit about that. People are like, yes, at some point, I think it will be a good idea for me to adopt, have a more formal plan for implementing AI adoption is what I'm trying to say. I think that there are some commonalities setting AI aside across our industry, and there are some things that you're helping agencies solve that there is a sense of urgency. It's no longer, that sounds great someday, that someday has to be now. Can you speak to that a little bit?
Taking the AI word out for a second, just the urgency topic in general. Mm-hmm. Probably in the past, I'll say year, we're doing a lot of work on this exact topic, so I'm glad you brought it up. In the past year, there's a very small number of agencies that have done a lot of investing for the 2 or 3 years prior. And it's very hard to get this data, but when you talk to several dozen firms on the creditor side and the agency side, the themes and the trends start to spike out. And there's a very small number of agencies that seem to have like 7 or 8 things going well. 1 or 2 are sort of fueled by some AI, Gen AI type capabilities, but they're surrounded by 6 or 7 other things. And what we're starting to notice is there's a performance sort of bifurcation going on. And the tough part, the urgency, is when that bifurcation begins and agencies start to perform better, notably better, it is tough for the others to catch up. The flywheel, once you start turning that flywheel, others can start, but it's an accelerating situation. Income statements and margins are not super fat to begin with. So from the agency side, there is definitely some urgency to understand what your roadmap is, understand what the best agencies are doing and how they're doing it, and to get there. Because at some point, you're not going to be able to catch up and you won't be able to compete. And then on the creditor side, the same is true. They too have shareholders to work against, but their agency network is beginning to bifurcate, and that's what's going to be the forcing mechanism. So it's there's a year or 2 left to figure out where you are and how you're going to catch up, and there's the urgency.
Yeah, that's interesting. I think there are a lot of us out there who would like to have the access to as many agencies as you do. I feel like I have a pretty good network and people are willing to share to an extent. I'm sure that you work for a number of agencies, and we'll talk about that at different levels of sophistication. Are the kind of key differentiators that you're talking about when we're talking about sense of urgency, are those things that are being developed in-house, or are they, I guess, maybe tell us what they are, and then 2, are they accessible to the common?
Yeah, it's accessible. None of them are secrets. If you listen to Mike Gibb, if you listen to, look at the things that I post, many of the topics that you talk about, a few of them, I'll just list out a few, and I'm actually building out a much more formal articulation of probably 10 or 12. The top 2 or 3, and then I'll answer the second after your question, are some modeling capability. So your propensity treatment segmentation models, those that have added capabilities are not only pulling in the traditional data sets, but are pulling in channel engagement data, pretty granular levels of engagement data, but also behavioral, sentiment, and situational data. So if someone is on disability, your text messages should be different. So your modeling is step 1. Step 2 is being able to have, even having multi-channel engagement capability to begin with. It's surprising, I think 50% of the hands went up at, I think it was one of the ArmTech forums, who's using texting, and only 50% of the hands.
That's what I was going to ask. How many people you work with actually have the or omni-channel?
It's interesting. Let me come back to that if you don't mind. So having the modeling, having the channels, and then having the analytics that analyze what's going across the channels is really the core of it. You can add scale, you can add a CRM and a telephony that can work in real time, you can add debt settlement integration, you can add people and vendor operation, you can add some other things. When you add it all up, it equals sort of what the haves have. Specific to texting, email, portal chat, smart IVRs, I'd say 2/3 have all those. Now, how mature they are is a very different story. What vendors they use is quite varied. And the end of all that, where the proof is in the results, what percent of your collections are generated through digital without any human involvement? That tends to be a real differentiator. It varies by where you are in the cycle and what the credit type is and what the paper is, but you can pretty easily understand people's maturity by sort of starting with what do you have and what sort of results are you getting. Then you can unpack how they're doing it. Sorry for the long answer.
No, it's great. I apologize that I asked like 3 questions at once there. I really like starting at the data and analytics, and that's something that we're working on. I think actually in one of Mike Gibbs' webinars, we were talking about something similar, and I was trying to explain that, you can give 2 people a sword as an analogy, and they'll use it differently. And I think for the vendors that are easily accessible, you probably have people using them in more unique ways. And are able to be more successful, more efficient based on their data collection and what they're doing with the data, right? So kind of looking at that, what are some of the creative ways, or how are most of the agencies at the higher level of sophistication, how are they collecting and processing that data?
There's what they're doing. The other bucket of data is what their clients give them or allow them to do as well. That's a very large variable in how effective and efficient they will allow you to be. Continue to be amazed at how some very, very large lenders won't let very sophisticated agencies use all the tools in their toolbox, or the data they give is the bare minimum. So that's a very big variable.
That's a great point. Very common on the medical side as well, and there are some reasons why people don't want to share, some of which are the same as traditional lenders, banks. Yeah.
It's interesting, many agencies that work for some that are more open and innovative versus those clients that are less open, oftentimes will sort of optimize their engine on the former and use that performance case study to nudge or encourage lenders or clients to sort of begin testing their way or learning their way into some more advanced capabilities. I think back to your question a second ago, how are people aggregating and leveraging the data? Very few are gathering all of the multi-channel data and aggregating it and merging it into their traditional credit scoring models. Everybody that I know of that's sort of at the top of the curve is doing that. Like if you're not doing that, a lot of people have a tough time. It's not that they're doing it out of choice. They have a million other things going on, but a lot of times their data sets are not real time. They're not easy to aggregate. So they're putting a lot of time into creating central data repositories and standardizing the input data to then be able to aggregate and see what you have is not easy. But I'd say every one of the top 10 that have already figured that out and are now optimizing how they analyze those expanded signals to drive very rapid, specific actions. The other side of that point is I'd say most agencies have a single dialer file that they call that day, and they sort of treat and prioritize everybody roughly the same within that dialer file. And then the texting strategy or email strategy that they use is a stable of like 10 different messages, 15 different messages that they use in different order based on certain rough events. Mm-hmm. But the level of customization is very, very low to non-existent for most firms. They are roughly they're rightfully celebrating turning on on their email channel, turning on their text channel. They're needing to aggregate that data, analyze the data, and then react to that data. And that's the curve they're going through. And the leaders have already gone through that and are on step 4 and 5.
Yeah, it's interesting. I've been doing this a while, and we've been blessed. We've had quite a few number of agencies join our group with, again, different levels of sophistication. In my day, I've seen agencies working off of cards and that type of thing. I think I would by no means say that our group is at the higher end of sophistication, but through services like yours, we're getting there. I think one of the common things that I hear people talk about is, yes, celebrate turning on the email channel and the text channel or both, but that's becoming, honestly, that's half the game. It's the ability to communicate in those ways and then do something with the data. I think it also, just speaking from experience, can be challenging to have third-party vendors that kind of make up an agency's tech stack, make that easy or facilitate that. And through conversation with you, I think there are people doing some creative things. Like, can you tell us, like, what is the low-hanging fruit for somebody who is doing email and text? They have a third-party collection software. What's the best way for them to start or take and analyze data?
I would probably two things. I would figure out a way to take your existing model data, and generally it's placement file. There's a TU risk score or whatever you choose, whatever you've used forever. I don't know if it probably create a new repository where you could fold in your engagement data. Like simply, did they open the email? Like yes or no, like that's a start. Or when did they open it? Or did they click the link in it? Like these structured data attributes that you can get out of your respective channels. And every one of those elements is another thumbs up that they're engaged, that the probability that they'll pay is higher, and simply use that to enhance the slope of your curve. Most don't do that. I would say that's definitely step 1. Then start thinking through this concept of personas, where if someone, the balance or their credit type or what type of paper it is, or if in the creditor space, is it the first time they've ever been delinquent? Go after with more of an education message. If they're a sloppy payer, their message would be different. So start thinking about cutting or segmenting your account set, not by dollar amount and age, but by behavioral type, to then learn your way into creating different messaging or different cadences or frequencies. That would be the second thing that is easier to do without a big tech lift, that will begin to reveal how your performance can differ by moving beyond everybody gets the same message at the same number of days on post placement.
Yeah, that's really smart. I think one of the key changes here is the traditional kind of analytics or modeling scoring happened on the front end, right? When you got the accounts, you'd process it, and then you'd kind of engage through a collections plan or strategy. And now it's just as much about that, but the data that you're collecting, I think the ultimate is you have text, email, chat, phone calls, dialing in what the right combination of all of those are, and making as close to, if not real-time plans. Very smart.
There's definitely a ladder of expense, like email is quite cheap, that people generally front run the file, their first activity. But even the email activity should educate your dialer strategy, both in velocity and time of day of week. Like there's a lot that you can learn by simply what didn't work in the digital initial paths on subsequent investments in dialer and letters. There's some cool stuff going on in the letter space as well. Like who would have thunk that one? But it remains, one of the 4 or 5 legs of the stool that need to learn from the other 3 or 4 legs as well.
Before we pivot, because I know that you're looking at your group and your clients are looking at more than just the data analytics of digital communications. You said one thing, you mentioned segmentation, account segmentation, building personas. For the agencies out there that do have a higher level of sophistication and understand what that means, can you just walk us through that just a little more in depth?
Yeah, The way I think about it, and I'll probably get comments on Twitter or something, everybody thinks about it differently, or maybe I'm wrong, I don't know, but I think I'm right, just different. Propensity, I think people understand what propensity is. It's the likelihood they're going to pay, and how you get there, everybody gets there is a little bit different. Once you determine your deciles on propensity, it's the other axis. It's, okay, these are the most likely to pay, but within that decile, there's very different subpopulations. Those that have, I don't know if younger or older, or people that you know what their payment history has been, what their transactions have been. Like, is it a more entertainment or more necessities that they're spending money on? Any other information you have around their other credit limits, their other just life situation. If you've called them and they've said they got in a car crash, or they lost their job, or they have a medical issue or fixed income, these are all other structured data attributes that allow you to put each of those propensity deciles into subpopulations. So that's the segmentation strategy. And then the treatment strategy is for each of those intersect points. What are you going to do? What channel are you going to use? What offer strategy are you going to use? What velocity of investment are you going to use? A lot of times that maps to settlement strategy, small, medium, large settlements, small, medium, or large dialer velocity. So that's the way I think about it. And that's may or may not be using the exact same terms that other people use, but that's definitely what's being employed and showing meaningful difference.
Yeah, it's amazing. And again, some of the questions I'm asking, we're going off path slightly, but I'm fascinated by the data piece of it. And I've had other conversations too, where there probably are new data sets that will become available that we're not currently aware of. I've heard some people talk about the potentiality of maybe like smartwatch, like how well did the consumers you're trying to reach, how well did they sleep last night, type of building that into a propensity. And maybe that's an extreme example, but I think that there will be more accessible data in the future that will shape this conversation.
I don't know if this is meant to be a segue, but it's a great segue into some of the Gen AI tools that are out there. Alternative data sets is very cool. One data set that I've seen surprise people are the insights you can gather from unstructured voice data. That is, with some of the tools that are out there, tremendously valuable. The other bucket that's coming up pretty quickly and does exist, not really at scale yet, is some of the Gen AI voice bots, where the former example is you have agents that are calling consumers or patients, and within that human-to-human conversation, you can extract some pretty cool sentiment or why they're delinquent type attributes. But with some of the Gen AI bots that are coming inbound and outbound, you'll be able to dramatically increase that frequency and extract more of that same data. It's been, for as long as I've been alive and everybody else in the world, being able to extract structured data from conversational, be it human to human or bot to human, has been this untappable golden goose egg. And when you employ some of the models that are out there, it's now many folks are starting to use that.
Yeah, that's amazing. I don't think we're far from analyzing data that's bot to bot either. Had that conversation a couple times as well, as it becomes more accessible. So
I don't know if any of your listeners have ever received an inbound caller from a lender's bot or borrower's bot.
Yeah, not yet. I can't say that I have. If we have, I'm not aware of it, but at some point, I think that's pretty realistic, something that we're looking at.
And it's scary. Like, how do you detect fraud, right? But yeah, to your point, bot to bot is, you're just gonna sit back and have to just watch. I don't know how you're gonna manage that. I haven't heard come up twice. But
yes, I think that Heath and I have talked about that a couple times, and if you're talking about kind of building a repository or a data box, it needs to be built properly to anticipate for these alternative data sets that we're not currently aware of, and those types of things. So I follow your content on LinkedIn, good stuff, and part of your kind of newsletter that you have. And I liked the goal in the most recent one where you're talking about helping your clients, kind of the industry, save $100 million in 2025 and $1 billion in 2026. So we've talked a lot about kind of data and digital communications. What are the other strategies? How are you helping save in other areas?
Yeah, those numbers have really good rings to them, and they're true. They're very attainable. I think I've probably talked to about at least 100 companies. About half of them are creditors, half are creditors or debt buyers, and another half are agencies. And everybody's roughly in the same boat. Of the 10 different things that are needle movers or 15, nobody's doing them all. And every single conversation, like 2 or 3 things spike out as near term or longer term opportunities. We've had conversations and you're doing a lot of things right, but everybody's got a couple things that they learn from. So lenders, debt buyers, and agencies alike, we've already talked a lot about the data aggregation, analytics, and action, and omnichannel. I think a couple of other buckets would be in the boring space. Like few agencies are offshoring. Few agencies can answer questions confidently around how they're optimizing just their payments. It's super boring, but it's like the third largest line item on your OpEx. Like how much are you paying, and are you confident it's a competitive rate? So payment processing, debt settlement integration. There are some people that are much more advanced and automated in interacting with debt settlement companies. What are some of the other ones? Those are a few. There's CRM.
At your advice, we've kind of looked at some of those, less sexy maybe, or it's not a huge shift in the way that it's been done for many, many years, but significant cost savings. And it had been, for the amount, payment processing, great example. For the amount of money that we and other agencies are spending, should it be something that you're looking at every year, potentially?
Yeah, there's been a shift in the past 5 around the level of banks that are interested in underwriting the collection industry, and therefore the competition, therefore the margins, therefore the price opportunity for you, for the payment processors.
That's a great point.
So that's one. Sorry, another one that came up is cybersecurity isn't a moneymaker, but it actually could be a cost savings, because if you're able to raise your cybersecurity defenses, some of the cyber carriers are starting to respect those in a new way and give more attractive cyber insurance coverage. So some of these, your insurance policies, your payment processing, your texting is becoming a more competitive space. Costs to doing that are starting to come down. So those are some of the other levers.
Yeah, it's a great point. Short-term memory maybe, but you were right. It was 5 years ago where there was only a handful of payment processors. I think there was even a period not long before that where it was difficult for some agencies to have a regular bank account. It's changing, definitely.
Yeah, or you'd have it all set up and all of a sudden they'd drop you.
Yes.
You'd have to rush and sprint and beg.
Yeah.
And that's definitely not the case today. But when you ask people what are they paying and what's their volume and what's their mix, it's generally buried in it's hard to, they don't know is the short
Not
answer.
one-to-one either. It's hard to do a comparison even with invoices side by side.
Yeah.
Yeah, and that is a service that your team is able to provide.
The other thing we're trying to do is we generally go to where the collective pain or interest is, and we'll then gather the best practices from your peers. And if there's a very clear couple of vendors that meet that need, then we'll go to those vendors and say, can you give us all sort of some volume, respect? So there's a few of those buckets that has been super successful, and they need access to the industry and get their help getting their word out. And in some cases, like the cybersecurity one and the insurance, if the best practice doesn't exist, we're helping to create it.
Yeah.
So we're trying very hard to not have an opinion. I know it sounds weird, but being able to aggregate and vet through crowdsourcing, or just when you talk to dozens and dozens, themes come up, and you allow those themes to point you to what others might want to know more about. It really keeps me out of, hopefully, people getting mad at me because I had an opinion on something that wasn't vetted.
Sure. So maybe it's less leveraging your relationships. It's more educating, and I apologize,
No. You're
letting the
exactly
market
right.
dictate in a more appropriate way.
And if you talk to a lot of people, the themes are very clear. With the exception of a couple of corners, the themes are very clear. Probably on 2/3 of the things we've talked about, the answer is there. And then you aggregate the dozen things that we've touched on, and it's there's not rocket science. It's actually doing it all is the tough part. And the creditors are starting to notice, and they're starting to ask questions differently of potential agencies to help expose those that have 7 or 8 of the 10 things already in place. So that's going to be an interesting shift, or a shift in the questions they're starting to ask to tease this out. Again, back to the urgency comment earlier.
Yeah, that's interesting. I probably about 5 years ago, maybe even a little longer, you started to see on RFPs or client meetings those types of questions surrounding digital communications. It's an interesting time we're going through, I think it's fair to say. I have to ask, and I think you're providing a great service. We're a client. I think there are agencies out there who want to know, you spoke about, the people at the higher end of the spectrum who are setting trends. What is your primary client base? I know it's a mix, but are you working with large and small?
Yeah, definitely large and small. Quite honestly, we're still figuring out our revenue model. I think you've figured it out. Like, our passion is to help the industry transform, and to do so without bias. But in that regard, small, medium, large are all people that we talk with. And ironically, we learn more from the small and nimble than the large and slow.
It's interesting you say that. Similar experience. So as I mentioned, we've had a number of agencies join our group, and we have our own standard operating procedures. But every time a new agency joins our group, we learn something. Yeah.
I'm telling you, the lenders have so much to learn from 10% of the agencies or 20% of the agencies, if they only knew what questions to ask. And we're helping. So back to your question, I'd say it's probably a third. A third are creditors, a third are larger agencies, and a third are agency/debt buyers, and then a third are smaller. So it isn't an 80-20. Tend to have more of an impact percentage-wise on smaller firms. We tend to learn more from smaller firms, but the absolute impact is larger the larger you go up. We try, from a revenue model, we're trying to simply help everybody go from here to there and share some sort of reasonable slice of the benefit, either on the vendor side, candidly, or on the client side, and be transparent about that. And it's not a ton. A lot of times we try to get volume discounts to drive margins down, and so that everybody saves more and pays less. So we haven't quite figured it out, but that's the mix of our current clients.
Yeah. I think you've figured it out, and I mean this in a positive way. I think you figured it out more than, I like your comments about you're not a vendor network per se. You don't have vendors that are offering pricing because they're going through you. You just are knowledgeable, and it's almost a shared knowledge. It's, a lot, but you're learning.
Yeah.
And that acknowledgement, I think, speaks volumes to what you're doing too.
I appreciate that. It sure is a lot more fun when you're not, like, I don't feel like I'm not selling. I'm every person I talk to, I learn something, and hopefully I share something. I don't think I literally have had a conversation out of 100 where I haven't learned something and they haven't walked away with something new to go research or to consider. And that does wake you up every morning. And as long as you're transparent and you're helpful and you can figure out how to pay rent, everybody wins. The 100 million and the billion numbers are not super unattainable. Some firms are, when you get 10% off your payment processing or 20% off payment processing, that's $1 million right there.
Yeah.
$500,000 for some firms. So it's a big deal.
Yeah. And that those savings are applicable to both the large and the small. There may be, some volume for the larger shops, but, a percentage point against for a small agency and a large agency are the same, right?
Yeah. And different issues are more applicable to different types of firms, but the list is the same.
Okay. So I have a question, and I'm just going to preface it. I didn't have this on my list, and we can delete this part out.
Now, I mean, yeah.
Yeah. So we talked a little bit about the different types of clients that you're working with, and I suppose levels of sophistication. And you may, go into a large shop or a small shop and easily identify things that can be upgraded. Can you talk a little bit about what the process is and what the time frame of your services are?
Yeah, I thought it was going to be much juicier than that. Honestly, there's really probably 3 layers. One is an hour or two of just learning what do you do, what's on your strategy list, what's on your plan. Then that's me learning. Then sharing back with them a customized based on what they just said, where they are, you sort of form it to the shape of that glass. And here's the top 10 things that that a lot of the leaders are doing. And it's a little bit customized based on where they are. And usually from that, even in an hour or two or 3 things come out. The other macro understanding, you get really, in a very short amount of time, you can figure out where they are in the maturity curve across many components. And sometimes the conversation then jumps to, well, where's the industry going to be 2 years from now? Or it jumps into, I'm neck deep in a CRM and a telephony conversion. What's 1 or 2 things I could be doing that isn't going to distract that primary objective? Others are, I'm thinking about flipping out my CRM and my telephony, but I haven't figured out email or data or anything else. So it's more of an ordering conversation. But to your question, in the first couple hour even, you can generally figure out where people are and a couple things they can do in the short term. Phase 2 is if you want a broader conversation, we can set up a series of discussions that go into 4 or 5 different topics that might be assessing particular vendors or creating different data capabilities or analytics capabilities. So it sort of varies, but it all sort of starts with even just an hour where we both learn where the other is coming from and go from there.
Yeah, no, that's great. That's great. So can you tell us how close, you talked a little bit about the urgency, and it's on my mind still. How close is or was the industry to being one where a small group of highly sophisticated players ran away with it and no one would ever catch up?
It's the billion-dollar question. I've had a couple conversations in the past couple weeks that basically say that date is past. And what's interesting is some of those leaders are becoming surprisingly open with explaining how they're doing it, because they're of the opinion that people can't catch up even if they knew the recipe. So that's the scary version. I don't think that's true, but I'll give you I don't know is the answer, but the extremes maybe I do feel more strongly about. If you're getting a good solid B plus and you want to figure out how to get to be an A minus, it's not too late there. If you're sitting at a C, you're not doing texting, you're thinking about your CRM replacement, you're fully domestic with 80% or 90% of your dollars coming in through voice. I hope you have some really, really unique paper that you work, because you're not in a good spot, and you pretty much can't catch up when your competitors are past that and are folding in Gen AI voice bots. That's a harder conversation.
Yeah, I think that I ask almost less for myself, maybe. I mean, I'm fascinated by it, but I do think that is a fear for a lot of smaller agencies out there, and almost to the point where I hope people don't give up, if that makes sense. Like,
no,
there are easy things that can be done to make upgrades and make your business better.
We 100% agree, and that's why our company probably exists, is to slow that potential bad ending to the story. The other variable is a lot of the timing to your question is going to be a function of the creditors realizing and swapping out agencies to know and to prove that some are better than the others. Like you can talk to people and they can explain what they do and how they do it, but if nobody knows it and they still work for the same clients that they always do, it's like the best kept secret. Mm-hmm. So it really, building your capabilities is one vector. The other one is getting that message out such that creditors or hospitals change their behavior and begin buying more of something and less of something else. That curve is unknown as well.
Yeah. That's interesting. Yeah, I would agree. I think that the rapid rate of change, and maybe we keep using the word sophistication, like there's a dramatic shift there that is not always on the same horizon for lenders or clients. As digital communications have become more prevalent for agencies, there's a lot of educational resources, in some instances significantly less for the clients that we work for. I think I've talked about this in the past too, where we've educating clients for contingency-based agencies anyways is a big part of the challenge. And we went through some offshore changes. Same thing. You have to almost sell it a little bit just because clients have less exposure. So
there's definitely, and the same, variation of maturity on the agencies exists in the creditor side too. And there are some leading creditors that are open and actively searching for those agencies that have 8 of these 10 things. And it's not easy for them to find them.
Yeah.
So it's going to be knowledge across the board is first, progress against those gaps is second, and delivering results and changing who works for who is.
All right. So in closing, what's next for Armtech?
It's a great question. We're traveling up to the creditors. That's where I was born and raised. We love working with the agencies and debt buyers because they're probably the most innovative side of that curve. But creditors at the end of the day, unfortunately, the creditors are going to win. Just they have all the data, they pay the bills. So learning more about where they are and how their strategies need to evolve is something we haven't spent a ton of time on. So we're going to balance the scale. The number of people we talk to is balanced, but our expertise in the creditor space is lagging. And I think both sides of the equation, if you will be smarter if we understand them both well. So that's what's next for us.
All right. Interesting. Can I ask which financial institutions, is that kind of the client base that you're moving up to first? Or what type of clients are creditors, I guess is what I'm asking?
Gosh, that's such a great question. In short, it's those that are brave, not those that are big. Those that are brave enough to ask, those that are brave enough to listen, to acknowledge that they have a gap. And the same goes through with agencies and debt buyers and creditors. There's a top 10 bank that knows that they are a decade behind, but are much braver, I think, to be involving and asking all the right questions. And those are the types of people that we love helping. So there's a couple of top 25 banks. There's probably 20 fintechs and non-bank lenders that are quite large. There's 5 very small, I don't want to say brand new, debt buyers that are basically starting and building to the destination state first. That's an interesting client set. There's obviously some agencies that are quite large that are going through a pretty rapid transformation. It's across the board.
Wow, that's great. Well, thanks again for taking the time today. What's the best way for people who are interested in your services to reach you?
Yeah, thanks. Armtech Advisors. So on LinkedIn, or we have a website, or you can find me.
That's great. I really appreciate it.